Hey, what is up everyone? This is Evan Carthy from evancarthy.com, and today this video is going to be about the expanding triangle. This is a setup, one of my two setups that I am using for my live trades here. It's worked out, has been working out very well for me, and so that's of course why I've been using it. So I'm going to go over what I look for the setup, and then the Fibonacci levels and retracements and extensions I use to get in and out of the trade. It's about 90% done. I would say there is one Fibonacci retracement level, or excuse me, extension level, that I'm still looking at, seeing if I want to get in it to it or not, and I'll talk about here later in this video. But yeah, it's been working really well, and so the expanding triangle is nothing new. It comes from the Elliott Wave school of thought, but I'm sure the way I trade it is not the same exact rules they have. But let me show you what I'm looking for. So what you're looking for is 5 points. So right here, 1 point, 2 point, 3 point higher high, 4 point lower low, 5 point higher high. So that's what you have to have. Basically points 3 and 4 either have to be a higher high or lower low depending on which way you're going for it. But point 3 has to be higher than point 1, and point 4 has to be lower than 2, or vice versa if you start the count from the other way. And then of course 0.5 to kind of solidify the trade and say that it is a legitimate expanding triangle, has to go above 0.3 right there. As you can see, 1, 2, 3, 4, 5. Let me move these things out of the way because that's another one we'll talk about here in a second. 1, 2, 3, 4, 5. So there we go. So this is a 5-point expanding triangle setup, some I'm looking for. But one thing that I also do with it is I also trade points 0.4. So not only do I trade off of 0.5 up here, but this down here, we'll make a little note of it right there, is 0.4, and that is what I also look to trade off of as well. So what we're looking for is, let me just draw the little Fibonacci levels here real quick. Take one of them off because I was looking at something earlier. Where is it? Negative 0.5. Yeah, there we go. Okay. There we go. So what I look for is, so going from point 3 down to point 2, which this is valid 0.4, since 0.4 breaks below 0.2 right here. My first entry would be at the negative 1.272 Fibonacci extension level, or excuse me, 1.272. It's just the negative things over here. You have to add 1 to them. So the 1.272 obviously didn't hit right there, so it's not a valid trade. So we'll go up the other way to 0.5, and all we do is look for the first entry. We go from the lower low to the higher high, 0.4 to 0.3, and obviously it didn't hit again, but no big deal. And so, but what I do look for the trade to be over is, to consider it over, or the way I consider it to be over, is I look for the 50% retracement level, which is that first green line right there, for that to come back and be hit. So as you can see here, it would be the beginning of 0.5. It definitely went higher than 0.3, so this initiates it. So anywhere along the way, if this comes back, the retracement level comes back and hits the 0.50%, then this trade is over. So we'll move it up to the top right here. As you see, it came and hit 50%, so that setup is over. We weren't able to get in, but hey, no big deal. There's always one around the corner. So this one right here, and it can get pretty weird looking than a lot of other expanding triangles, I think, for when they look, but it's just the way I've been trading it. So we'll start over here. So here we have 0.1, here we have a lower low 0.2, here we have a higher high 0.3, and now we'd be looking for 0.4. So as you can see, 0.4 goes all the way down over there. So in this trade, we would have 0.3 down to 0.2. So price comes down. Let's zoom in a little bit on this right here. Price comes down, it breaks out, so it starts 0.4. Now 0.5 isn't guaranteed to happen. Just because 0.4 happens, 0.5 does not have to guarantee to happen. And so that's just the way it goes. But if 0.5 does initiate, then eventually that does have to come back to the 50%, but 0.4 doesn't necessarily have to go back to the 50%, or 0.4 doesn't have to go up and create a 0.5. Hope that made some sense right there. But anyways, so there's 0.1, 2, 3. So we draw the fib level from 0.3 down to 0.2 right there. So we see it breaks out. So the 0.4 has been started, hits the 1.272. This is where I have my first entry. Then the 1.618, this will have my second entry right here, and then the 1.786, this will have my third entry. Now, where I have my stop loss is just below the 200% level, the red line right here. I'd probably have it right in here, somewhere. So as you can see, this ticked out of it. It stinks, but it happens. No big deal. And then what I look for the exit, we'll go ahead and draw this up here. We look for the 50% exit. We just drop from the low. Keep the high up there at 0.12 at 0.3 up there, and we'll just draw a little 50% retracement box right here. Change it to the red line to signify that is a short resistance area box. So there's the 50% area. So as you can see for this trade right here, yeah, it definitely stinks. I mean, this does happen from time to time. But I would have had my exit probably no further, my stop loss no further than down right here. So this trade wouldn't have worked out, and I would have gotten ticked out of this trade. But if I hadn't gotten ticked out right there, then it would have gone up and completed it very nicely for her. A nice trade right there. But you know what? Losses happen, so no big deal. So we'll move on to the second one, or to the next one right here, because this was 0.4 in the setup right here. So what we look for is, now we want to look for 0.5, and 0.5 has to break this high right here of 1652.9. We'll just draw a horizontal line on there to signify that is the high that we're looking for to break to make 0.5. And there we go, we broke it. And the reason why I have my stop loss, let me back up right here. The reason I have my stop loss just under 0.2 right there is, yeah, you know, if I had just a little bit further, it would have worked out for this trade. But look how much further it keeps on going down. If I don't feel and get up right there, it just keeps on going down further. So that's what I've learned. Just cut my losses right there, take the loss for it, and move on to the next trade, because there's always one right around the corner. And this setup does seem, for where they have it set up with the Fibonacci level, it seems to work around 70% of the time. And so that would definitely make up for the losses. But anyways, there's 0.4. So we're waiting for this teal line to break, and there it is. So that starts the 0.5 right here. So this is going to be the fifth point of the broadening triangle move. And there we go, right there. So now what we do is we draw from the bottom of 0.4 right here all the way up to 0.3 right there, the teal line again, and this is going to set it up. So what I'd have working now is I'd have a short right here, short trade at the 1.272, the orange line right there. Then again, the exit will be the 50% level, and we'll draw that in here in just a little bit. Now let me zoom out a little bit. So it comes up, and there we go. We got in it right there. Let's keep on going up. Let's see what happens with this trade. Gets us in the 1.618, gets us in the 1.786, and it holds this time so far of what it looks like. It hasn't gone up over the 200% Fibonacci extension level, and I'd probably have my exit right around the 1700 level, something like that. But so far it's made it. Now real quick, let's go ahead and draw the 50% retracement box to it. And you know what I'll do? I'm just going to move this line up to it, and that will be the 50% level right there, this teal line right there. There's the 50% level based upon that swing high. So I'd have my exit just slightly above that 50% level, so probably right around that blue line is, right about there, 1653.4. So let's see what happens if price goes down, and there we go. Hits off it perfectly right there, completes that trade. So even though we lost that last one just a little bit ago, we went and made up for this one. Now, not every time will price come up and always hit the negative point, or excuse me, the 1.618 or the 1.786. These past two trades, it has done that, but not every time will. A lot of times it just hits the 1.272 and then comes back and completes its move. But these are two good examples to show you what can happen when it just ticks up, barely takes me out, or pauses just enough to come back and make a nice size gain for that one. So moving forward, let's look at another one right here. The chart I'm using for this is just the continuous contract for the Russell 2000s, a 15-minute setup. This works. You can use it on any time frame. Primarily when I'm day trading, I use the 5-minute charts, and then I'll also use the 1 minute to really fine tune the entries to get in on it. And then when I'm trading like stocks and cryptos, it would either be the hourly chart or the daily chart. But here we have another step right here. There's 0.1. 0.2, lower low 0.3. So we can go ahead and see if we can get a 0.4 going in here. So there we go. It breaks 0.4 0.2 right there. No, excuse me, 1, 2, 3. Yeah, breaks 0.2 right there. So it started up. But now we have to see, is it going to come back and hit the 50% and to complete that 0.4 setup? So yes, it did, came back and hit it. So we will not look to get into the trade, even if price, let me move this back down here real quick. Even if price goes up and hits the 1.272, we're not going to get in, because it showed enough support right here at the 50% to complete the trade. And again, like I mentioned a little bit ago, is not guaranteed for a 0.5 to definitely happen every time. So the reason why I get out at 50% if I'm trading off the 0.4, sometimes could be a continuation move that just continues to go up for it. So this trade would be kind of null and void. Wouldn't be looking to get into it right there. And let's see what ends up happening with this. And it just keeps on going up. So as you can see, this is just continuation trade that just kept on going, but we didn't lose anything because it violated how I was looking to get in for it. Now here is another setup right here. 0.1, 0.2, 0.3 higher high. And then let's move this down just a little bit so you can see this line right here beat that low right there. So there's 0.4. Now obviously if we take it from 0.3 to 2 is not enough to get us in the 1.272 trade. No big deal. So we'll start looking at it for the 5th point if it does move back up, and sure enough it does. So we'll drop from the bottom of 0.4 up to 0.3, and there we go. As you can see right there, it hit the 1.272, so we'd be in that trade right there, perfectly valid trade. And now let's see what's going to happen with it. It's going up, up, up. If it starts retracing, I'll draw that 50%. Okay, we'll go ahead and draw the 50%. Now I hit the 1.272. I don't think I would have been able to get in right there because my entry would have been at 1703.6, and the high for that candle was 1703.3. It stinks, but that's what happens sometimes. So we'll go ahead and draw the till line just to represent the 50% box right there. There's the 50% box just so you can see it. First come up, missed it. There you go. Bam. Took out the 50% right there. So it would have been a nice gain right there. It would have been the profit level from right there, just north of the 50%, about right there. And I'll just draw it over here a little bit. There we go. So that would have been the profit right there for that trade. Let me take that off, and let's see if I win it, because before I did this video I would just went and drew up a bunch of different expanding triangles I saw real fast. Some were winners. I can see some were losers, but for the most part, most of these trades are the winners, and following the guidelines I mentioned a little bit earlier will help keep you out of some of the bad trades, especially if you're going to trade off a 0.4. If you're trading off a 0.5, then obviously that isn't valid about that potential 50% then move upwards, because it does have to come back and complete it. So for here's one that's actually live, but it isn't complete trade yet, because we have 0.1 right here, 0.2, 0.3. So what we'd be looking for is 0.4 going up here. We take the bottom of 0.3 going up, moving up for 0.4. So if price does come up and break this, again, it's not guaranteed to do that for it. If it comes down and makes a lower low, it may never come up and break it, and probably just say forget about it and go on to look for something else. But if it does come up and break that right here at 1694.1, then that would start 0.4. Then if it goes up and hits the 1.272 level, the orange line right there, that'd be the first entry into it. But I'll tell you what, let me go over some. These are the charts I trade off right here. Like here's the S&P 500 E-mini futures right here, and here's a couple of setups. Ignore the yellow line right there. That's the 78.6 trade. But here we have that one right there, 2nd point, 3rd point. So then let's see what happens right here with this trade. Comes and hits the 1.272 right there, hits the 1.618, doesn't hit the 78.6 level right there, but we're definitely in for it. So let's see where it ends up. There's the 50% level right there. So we'll draw that line right there, and let's come back up to see what it looks like. And then yeah, so for those two contracts, there's that one, that's about the win target right there, the win level. And for that one, there is about that one right there. So that would have been a very nice trade that got completed for a win there for hold on, 1, 2, 3, 4. So now we'd be looking at 0.5 for the S&P 500. So then just taking it from the bottom of 0.4 up to 0.3, that would kick us off right here. And as you can see, this is a live and valid trade right now in this S&P 500. The reason why I'm not taking this, because I know this is something, as you see, I already marked it 0.5 up there, but the reason I'm not taking it right now is look over here to the left-hand side. This, I guess, this is me rambling, or you can consider this a bonus, so I'm not sure which one. But this is just one of the things that I was looking at right there, because I could have definitely gotten in right here at the 1.272, still could right here, but the reason I'm not is look over here on the left-hand side. There's a huge gap right here, and this is the 5-minute charts we're on right now, but from about 33.8225 all the way up to 33.88, there's a gap that's probably going to come back and be filled, and that's why today, when it's getting around these lows, I was going long in some other charts I'll show you here in a second, because I expect this to get filled. Now, if this price does not come back and hit the 50% level, which as you can see, it still hasn't yet, still has a long ways to go, or quite a bit ways to go down, but continues to go up, then I would be looking at getting in my first entry around the 1.618, and in fact, I'd probably move it close to where it'd complete this gap, because I just feel like the gap's going to be completed. That'd be my first entry, and then I'd get in a second entry around the 1.786, depending on that, and then of course have my exit wherever, if the pivot point turns up here at the around the 50% level. But that's the reason why I'm not getting into the 1.272 trade right here, just because it has this big old gap that happened Sunday when the market's open. And let me just show you one more here today. Yeah, so today on this chart right here, you can see it hit a support area, and this is going from 0.4 down to 3. Let's see here. 1, 2, 3, 4. Yeah, 4 to 3. Okay. Yeah, this was, I believe, a trade I took. I'll need to log in and see it. But yeah, it went down, hit the 1.272, got in there, got in the 1.618, got in the 786. I can see that it held down their support, and then moved this up, because this is actually up right here. And then came out and got it. So hopefully that made sense. That is the broadening triangle. There are 2 other trades you can take out of it when a trade is a failure, and in fact, let me just show you real quickly, because I'm going to make a more in-depth video about that at a later date, but it involves the shift pitchfork. Wait, was it this one I was looking at? Oh, the Russell, yeah, that was it. So that one that was a loss earlier right here, let's see if it would have worked out here real quick. If it doesn't, I'm just going to end this video, because I wasn't planning on talking about this anyway, but it's no big deal. Yeah, okay, you know what, don't even worry about it. I'll get it on another time. I'll get it on another video, but I just want to go over the expanding triangle, how I trade it, and that's that. All right, take care, bye.